Welcome back. It's Group C distribution day for YieldMax ETFs. Quick view of their dividends, or distributions, maybe is the best word to use. Things that stand out: HOOD is first dividend payout $3.30. Came out at $50, so on my website I'll break it down what the percentage basis is. But CONY was 74 cents almost, Netflix 68 cents, Carvana was at over 450, which is pretty solid relative to its previous dividend distributions. PayPal 55 cents, Microsoft 55 cents, LFGY almost 50 cents. I like those of the weeklies. I like LFGY. Then you see YMAG and YMAX are also pretty solid at 29 cents and 21 cents respectively. OLT very consistent right around the 10-cent range. Fiat was 26 cents, SDTY, GPTY, QDTY, RDTY, all kind of in the 25 to 35 cent range. And Chippy was at 38 cents. AMD pretty solid at 42 cents. And then Airbnb or ABNY at 38 cents. And then I guess jumping into my little website here, where basically I take all the distributions and I try to give them to you in a percentage basis terms. Let's see. So we got Group C today. So Group C. So as we can see, we got HOOY now fulfilled into the spreadsheet. Came out at 50s, currently at roughly just over 60. Recent dividend as a percentage of the share price right now is at 5.43%. Pretty solid. Cumulative dividend since this is the first time, it's $3.30, first dividend payout. And then as far as a total return, you take the $3.30, add it to the recent price. You're at over $64 or a 28% return so far for those who jumped in on the HOOY, probably not an IPO, but the HOOY inception date price of $50 per share. And then looking at some of the other ones, so I guess if you want to, I think the best way to factor them is probably on a percentage return basis, or I guess these little bars over here give you a illustration or magnitude of how they are, especially compared to the other funds. So you can see Microsoft was the least at a 3.1% return or distribution for the month. So 55 cents divided by the 17.75 share price gives you like a 3.1% return for the month, which is pretty solid relative to other investments, I guess I would say. But relative to the other funds for Group C, it's definitely at the bottom. Carvana came in at the top, almost 10%. And then CONY was very solid. CONY's share price was under 9, so 74% dividends, pretty solid. And then we had HOOD, or HOOY. I don't know how you would say that. HOOY, maybe, if you want to say that quickly. Pretty solid in the 5% range, just with AMDY also came in pretty solid in the 5% range. And then PayPal and Netflix were both in the 3 to 4% range, respectively. So overall, I guess maybe one other thing if people wanted to look at is, let's see, on a cumulative dividend basis, CONY has paid out almost getting close to $30 a share. So even, as I've said before, even though the recent price of the ETF price is down, the cumulative dividend's still looking pretty solid. And maybe on a total return basis, or maybe total return percent basis. So what's the best fund in Group C so far? Once again, not apples comparison. Some of the funds have been around longer than others. That said, HOOY just came out. It's already doing better than CVNY and DY. So guess it doesn't necessarily matter how long they've been here. If you got that initial YieldMax ETF pop, that going from 50 to 60.79 that HOOY's experience. But CONY is definitely the best, a 90.5% return since the inception date. Netflix also pretty solid, 72.75, and everything else is under 40. But yeah, just a little breakdown. And then, so I guess that's basically the YieldMax payouts for the month. Pretty solid overall, I'd say. If you ever got a couple of those at right around 10%, or even the CONYs, which was, looks like I lost it all of a sudden, 8.4%. That was also pretty solid. So anything over 5, very good, I guess, in my estimation. But yeah, I guess if you want to look at any of these on a per ETF basis, so if you're going to CONY here, this is probably the only one I'll take a look at. I'll make this video quick. I basically shared with you the distributions for the month. But CONY, if you look at it, its ETF price has definitely fallen. So therefore, as a percentage, it's still doing pretty good. But relative to the past distributions, not what it used to be. But it, over the last, I guess, 3 months, it's steadily been climbing up. 73 cents. I'd rate that as pretty good. And you can see the cumulative distribution keeps adding up. Hopefully with the initiation in the S&P 500, maybe the coin price, underlying equity price, will steadily rise higher, which can then possibly raise the ETF price of CONY. But overall, the total investment's been doing pretty good, mainly driven by that cumulative distribution. And then, so I guess here's the CONY share price since the inception. But I'm looking at all the variables. Total return is here in purple. Then pretty steady, right around getting close to the 40 mark again. And that cumulative distribution for CONY has been steadily increasing as well. I don't know what else you want to see. I'm clearly owning the underlying stock, at least recently. With the inclusion in the S&P 500 has been the better investment. And then just recently, actually, the reinvesting the dividend option actually took over non-reinvesting options. This one's interesting because you can see reinvesting dividends is a better option, but then with the steep fall in the underlying equity price, not reinvest your dividends became the better option, but then reinvest your dividends became the better option. Then once again, you get that steep fall in the stock price. Then just keeping your dividends in like a checking account becomes the better option. But just this month, it looks like reinvesting the dividends became the better approach for those who are trying to think what the best strategy is. I guess in my opinion, for those looking for income, YieldMax ETFs are definitely a good solution. Although I would always take some of my money and put it in the underlying equity. So if there is that big move higher, you participate in the jump. So as you can see here, it went from 4,500 up to 6,300, whereas these two YieldMax approaches went from 3,600 to 3,800 or 3,100 to 4,000. So you get a jump as well, but you don't get that full jump. But I do like YieldMax ETFs for the income, which the underlying equity does not provide. But for those looking for an investment opportunity, I would combine the two to get a hybrid approach going forward. But yeah, that's my update for today. Group C was pretty good, at least in my estimation. You had a couple right around that 10% range. And you had, so of the monthly ones, 1, 2, 3, 4, 5, 6, 7, 4 of them were above 5%. So that's pretty phenomenal. And then PayPal's was over 4. Then Netflix and Microsoft in the 3 range, not terrible, but overall as a group, very solid. You got over 50%, paying over 5% for the monthly ones. But yeah, going forward, I hope to include the weeklies, and then I also would like to take a look at what these actual funds hold and maybe analyze it from that perspective, and analyze what the traders are doing and pick out strike prices that maybe you should target as an investor in these that you want to hit before payday. So anyway, thanks for tuning in.